Welcome back to Global Eye. India's green aspiration is set to get a big boost. The UK's development finance institution, British International Investments, has signed a deal with Asia's Blueleaf Energy to develop clean energy infrastructure in India. As per the agreement that was signed in Singapore, BII is providing a $75 million financing facility to Blueleaf. The company's renewable energy projects are expected to generate over 3.2 gigawatt-hour of clean energy annually, avoiding about 3.1 million tons of carbon dioxide emissions. Joining us now to discuss this is Shilpa Kumar, Managing Director and Head of India, British International Investments. Thank you very much for being with us. Let me begin by asking you, what is the significance of the investment that BII is making in Blueleaf, and how does this impact India's energy transition?
Yeah, so as you're aware, Parikshit, we have a deep interest in climate finance in India. And out of our portfolio of $2.2 billion, we've invested a substantial part in climate finance. What we try to do is to support private capital and entrepreneurs in the space of generation, transmission, distribution, through different forms of climate finance. And I think Blueleaf is significant from a couple of reasons. One, because it squarely supports the country's ambition of 500 gigawatts renewables by 2030. Secondly, we like the team which runs this, which is committed to executing these projects. And thirdly, the kind of capital we have come in with is really mezz debt, which honestly in India is a space where you don't see that much commercially available capital. So for all these reasons, we think this is a significant deal. And we do hope that, with this check, we will be able to see many more deals of this kind in the market.
Right. I would like to ask you about the total portfolio that you have in the country right now. And we're nearing the end of 2025. What about 2026? How do you plan to scale up investments in the country?
Yeah. So if you look at our current portfolio, like I said, it's about $2.2 billion and about a fourth of BI's global balance sheet. It's really focused towards supporting three things, which is productive, sustainable, and inclusive growth for the country. When we invest, we try and, focus on these mandates of ours. And at a very, high level, that's what we'll continue to do. However, one important point is that we're ending our last strategy horizon, and that gives us an opportunity to really rethink what we want to change. But fundamentally, climate will stay front and center of what we want to do. And inclusion also at a broad level will continue to feature in our investments.
All right. So you've said climate and inclusion. Going forward, within these areas, what are some of the sectors, the kind of companies you would like to invest in? Today, the major theme is around self-reliance, having domestic capabilities to somehow protect yourself from global vulnerabilities and supply chain challenges. So keeping that theme in mind, within climate, within inclusivity, what are some of the companies and sectors you would like to target most?
Yeah, no, that's a really good question. And if you look at, the two big pillars of our climate finance work, one is renewables, the second is mobility. So we have very interesting portfolios across the width and depth of these two sectors. And one thing that we spend a lot of time thinking about is how do we build robust supply chains, both for renewables as well as in the mobility space. If you look at what we did this year, in the middle of this year, we actually supported Renew with a $100 million check to build their solar cell plant. In the same way, we keep looking at other parts of the supply chain, both for renewable energy, as well as, of course, for electric mobility, to try and see what are those things for which we are dependent on imports. I think one important thing to keep in mind is India is such a large market. And when we have made big shifts, both in renewable energy as well as in mobility, we need to ensure that these big shifts are supported by strong supply chains. And I would add, we're seeing very interesting business models and evaluating both across equity debt, mezz debt, different models in these spaces.
Right. Now, one of your major investments in the mobility space was the Mahindra Group. Following that, how interested are you in the electric vehicle space in the country? Are you mulling similar partnerships, similar investments in other OEMs?
Yeah. So, we actually have a very interesting portfolio in electric mobility. We've spent $330 million, or invested rather, in various different kinds of models. We are present in manufacturing, we are present in three-wheelers, four-wheeler trucks, four-wheeler autos. We actually have three subsectors of investment. The first is manufacturing, second is what we call sales, and the third is what we call platforms, which is, it's great to have all the different form factors of electric mobility, but how do you ensure that the whole ecosystem kind of grows up and supports electric mobility? So some of our platform level investments are charging infrastructure. Some of the more interesting innovation-based models we've backed are battery technology, battery swapping. We are looking very closely at financing in this area. So there's a portfolio, I would say, of almost 15 to 20, both direct and co-invest checks that we've funded in this system. I also want to say that what makes this a really interesting portfolio is we've supported a number of funds and also have, therefore, the ability to watch young ideas grow up and, then kind of take our bets on direct investments in this sector.
Right. Shilpa, when it comes to rare earth magnets, due to supply chain challenges, India is considering a 7,300 crore scheme to manufacture rare earth magnets in the country. Is that a sector you are interested in? Are you looking at companies? Because this is a very early stage. Even companies who claim to be making rare earth magnets or refining rare earth minerals are at very early stages.
Yeah, no, very true. And what happens is as you, backward integrate, what also happens is the check sizes go up, the technology risks are also much higher. And therefore, we are, I would say, studying all of this very closely, because in the end, while we're keen on, having robust supply chains, we also need to kind of ensure that the kind of investment we make is backed by, an entrepreneur who's capable of taking these technology risks, who's capable of building out at scale, and who's capable of supporting CapEx at scale. So that's something we are looking at, but, much work still needs to be done.
All right. Thanks, Shilpa, for joining us on the program. With that, it's a wrap on this edition of Global Eye. Many thanks for being with us. Goodbye.